Today we're going to have a look at some ASX stocks that have recovered from their March lows and some stocks that are yet to recover as we slowly reopen the economy. Let's start with the recovered stocks. The first one is the payments company Afterpay or APT, which received an investment from Tencent in China to recover from a low of $8.90 in late March, before rocketing to more than 4 times that by mid-May. That effectively brings it to even higher than its previous records in mid-February, when the economy was placed under lockdown. Number 2 is the medical company ProMedicus with the ticker PME. It is one of the few companies in the healthcare sector that has completely returned to its February stock price. This recovery was accelerated by a share buyback from the company, which effectively benefits the remaining shareholders and improves its earning per share ratio. The company directors have also been busy gobbling up shares while they were cheap, and it definitely helped the recovery. Number 3 is the cloud accounting software company called Xero or XRO. I used this about 5 years ago and thought it was a winner back then, and it's good to see that it recently turned a profit of $3.3 million after enduring many years of losses, and investors have welcomed this news. Number 4 is the mining company FMG, which is now at an all-time high even compared to its February prices. The pure iron ore production company has been smashing profit targets, and investors have favoured it over Rio and BHP for that. Number 5 is the healthcare company Mesoblast, which has recovered from just over $1 a share to almost $4 each. This rise happened on the back of news that $100 million of funding was being raised for a vaccine, which tends to trigger investor FOMO, though the price may pull back slightly as investors seek to lock in profits. Itself and Afterpay have been leading the recovery on the stock exchange. But what if you didn't own those stocks? Let's see what other stock opportunities there are still awaiting a full recovery. Number 1 on the list of stocks yet to recover is EML Payments. After reaching a high of $5.70, the stock plummeted on the back of news that its move to acquire prepaid financial services was delayed. Coupled with the slowing of the economy due to the virus, the stock dropped to $1.33 before slowly recovering to $3.50. This was helped by announcement of successful acquisition of PFS on renegotiated terms, and are one of the few fintech companies that actually turn a decent profit. Number 2 is the Rio Group and Domain Holdings Australia. These are the market leaders in real estate sales listings and are closely tied to the property market in Australia. However, their profits are not correlated with house price increases, but rather the volume of listings. This is expected to climb as sellers come out of hiding with the relaxing of restrictions on auctions and inspections. You can also see that when we overlap their prices, they are both fairly in sync with each other, and either companies will be a good bet as we come out of the lockdown. Number 3 is the mortgage broking company AFG. This stock was trading just under the $3 mark in late February and fell to under $1 by mid-March. Today's price of $1.45 does not reflect its potential, as it currently has its merger proposal with Connective under ACCC review. If this is approved by the 18 June deadline, they will become the biggest mortgage aggregator in Australia, and its stock price recovery will likely go beyond its February price. Number 4 on the list are all the big banks which are yet to see any sort of recovery. Most banks are signalling deferred dividend payments, and it will take a long time before investors will have confidence in banks again. One standout is the investment bank Macquarie Group, which has more diversified assets and investments and has fared better in the pandemic than others. Nonetheless, their stock price is still due for a recovery, though it may take some time for any banks to fully return to normal. The final stocks on this list are the travel ecosystem stocks from Flight Centre and Webjet to the Qantas airline and Sydney Airport. The safest bet will be on Sydney Airport, which will not be allowed to go bankrupt by the government. All the travel stocks have stayed at their all-time lows and will not recover until domestic flights have resumed, and only fully recover once international travel restrictions have been lifted. It is inevitable that this will happen, but may be a couple years for that to occur. Thanks for watching the first of many of these quick stock picks. I'll aim to make more of these throughout the year, so hit the like button and subscribe to get notified of new videos.